Hello everyone, this is Jay, and in today's video I wanted to quickly review my portfolio, which it went up on a run yesterday, especially after the Fed met and Jerome Powell gave some news about interest rates, and I'm sure your portfolios also benefited yesterday from this news. So let's go right into the tab that I have right here open from Yahoo Finance. And it says Federal Reserve holds interest rates at 22-year high, signals 3 cuts next year. After he announced this, definitely the market went up on a bull run pretty much yesterday. So right here, we're going to read this very quickly, which is the Federal Reserve maintained its benchmark interest rate on Wednesday in a range of 5.25% to 5.50%, the highest in 22 years, but signal it will likely cut interest rates by a total of 75 basis points or 0.75% in the year ahead. So this should be happening in 2024. That's what they're hoping that they're able to do if inflation just continues to fall closer and closer to the 2%. So I am hoping this happens definitely. So right now, the stock market, if we go into the stock market map, and you see yesterday, it was pretty much everything was in the green. There's green everywhere. There's only a few reds. But pretty much Apple was in the green, 1.67%. Amazon was in the green by almost 1%. Google, Procter & Gamble, Walmart, they were all in the green. Costco was also in the green by 1.99%. Pepsi was in the green by 2.10%. There was so many companies in the green. Chevron, Exxon were in the green right there. One of the ones that I really liked that went up in the green was Bank of America, which is one of my holdings. It went up 4.23% yesterday. So I'm definitely happy about that. Wells Fargo, any of you who hold Wells Fargo, it went up 2.78%. Broadcom, ticker symbol AVGO, 1.62%. Texas Instrument went up 2.46%. So definitely a lot of the companies went up. Intuit, ticker symbol INTU, went up 2.70% also, which is awesome. Visa and MasterCard, they just continue to go up. After I wanted to try to start a position in one of the two, they just continue to go up and up and up. I might have to start a position with one of them being at an all-time high, I think. But one of the companies that I hold that was definitely in the red, which is this one right here. It is very bright red. It is Pfizer, ticker symbol PFE. It went down 6.72%. So definitely there was some news yesterday that they announced, and that's what brought it down to the red, which we're gonna read it very quickly and go over the stock very quickly also. But before we go into Pfizer, please don't forget to hit that like button to continue to support the channel, please. All right, so let's go right into here, and this is why it went down. So let's read this very quickly. The company expects 2024 revenue of $58.5 billion to $61.5 billion. And what happened is that Wall Street had anticipated sales of $63.17 billion based on a survey of analysts by LSEG. So due to this, the share price went down. Just because they expect the revenue to be around that. I don't know. I don't have an opinion yet in the matter, but my strategy is still the same. I definitely want to pick up some more shares at these cheaper prices. I do believe in the company long term, so I am okay on the company being in the red, and I'll show you guys in a few seconds why. But let's go right into the stock analysis map, and you can see it right here. It just went down on a dip, and from a day ago or 2 days ago, it went down over 7% pretty much. Pfizer, ticker symbol PFE, market cap $150 billion. Right now, I guess after this announcement and after the price going down, the EPS, earnings per share, went to 1.83. That PE ratio 14.57, but the forward PE is at 12.62. So we're hoping it definitely recovers, but I don't want it to recover yet. I want to pick up some shares around this price, so I'm hoping it stays around this price by Friday. So I can pick up some more shares. And if you see right here, the dividend 6.15%, $1.64 a share per year. So if you pick up any shares right now, please do your research in it. If you pick up any shares right now, you'll pick it up with a 6.15% dividend, which it is awesome. And these are qualified dividends, so that's also good news about that, which is great. I definitely want to pick up some more shares on Pfizer right now. Now, what worries me, it is when I go into the dividends tab, it is this payout ratio right now. It is at 89%, which if it continues to go up, if this is accurate information, which I'm gonna try to take a look at other websites like Seeking Alpha and Yahoo Finance. I'm gonna try to do some research in it. But if the payout ratio it is that high, most likely there will be a dividend cut. So, but let's see. Let's see what happened with Pfizer. My strategy is still the same with Pfizer. It hasn't changed. I do believe that the company will recover. Will it take time to recover? Yes, I do believe it is going to take time to recover. It is not going to be a company that is going to recover by next year. I do believe it is going to take a couple of years to recover and for you to see some gains. So in the share price. But for now, I'm definitely going to enjoy that nice dividend yield of 6% on any shares that I pick up around these prices. So I'm definitely going to be purchasing more. This is not financial advice, guys. Do your research, okay? I'm not a financial advisor. So let's go into my portfolio right here. Let's go into my spreadsheet and let's go into my portfolio, which when we take a look at it right here, it is finally in the positive, in the green right here by $51, as you can see right here in the bottom right corner. Which is awesome. I have a lot in the green right now, and I feel like there's not much opportunity for me to continue to DCA into my companies, except there's a few of them, like O Realty Income is still under my calls. It went up to $56 as of yesterday. I hope you guys picked up some shares around 40 something dollars. I know some of my subscribers did. I remember some comments about it. Some of them picked up some shares around 40 when it was like around $45, $46. I definitely did not take advantage of that, but I did pick up some around $49. So I'm definitely happy about that. I was able to bring down my cost per share to $58. I am down in the negative only by $38. Now, do you all remember when, was it like 2 months ago, I was down $800 in my portfolio, and then look, out of nowhere, I did not sell. I did not panic. I did not sell any of my holdings. Why? Because I'm just a buy and hold investor. I just want to continue to hold these companies. I like these companies a lot. Would I make some changes in the future? Probably. I can't promise I won't. But as of right now, I am definitely holding right now. Johnson & Johnson is another one that is down. It's under my cost right now. It is at $155. And my cost per share is $160. So I definitely want to buy some more. I hope it stays around this price by Friday when I make my deposit. And then Pfizer, it is definitely down right here to $26.66. So I'm just going to continue dollar cost averaging into Pfizer. And I'm going to continue to bring my cost per share down. If I could bring it down to like $30 or something like that, that would be awesome. And then I want to hold it like around that price. So I'm going to try to take advantage of that. That's what I did with a lot of these companies, to be honest with you. But let's go right into the next one, which is Medical Properties Trust. I'm not investing any more money into this one. I'm going to hold my 60 shares. I like my position there. uh, and I am in the negative by $276. So this is the only holding really bringing my portfolio down right now. And I'm hoping it does recover in the next couple of years. So I'm going to try to hold and grab those dividends. And I'm probably what I'm going to do with those dividends, I'm going to put them into VYM or SCHD, which is the two ETFs that I really want to grow. And then the next one that is in the red, it is CanView, which I am almost at 10 shares. I'm going to make my $5 purchase this week. Also, again, I've been DCAing $5 to $10 every week into CanView. And as you can see right here, I'm almost at 10 shares, which is awesome. My cost per share is $23.30. So I'm continuing to bring my costs down. So I'm going to continue working on that, definitely. But most of the companies that I have right here in the green, I continue to DCA into them, and look at them right now. They're all in the green. Coca-Cola, it is now in the positive. I hope you, some of you picked up some shares. Anyone that wanted to hold Coca-Cola picked up some shares when it was around $51, $52. I definitely picked up some. I definitely invested into this company when it was on a dip. I did not panic. Every time I see this red right here, I see a sell sign. That's how I take that's the approach that I take. That's my strategy right there. I don't panic. I get happy. I like a lot of these companies like Johnson & Johnson. Just because it's in the red, I'm not going to panic and say, oh my gosh, Johnson & Johnson is bad. It's going to go bankrupt right now. No, why would I think that way, right? So Johnson & Johnson has been in business for more than I have been alive. So this company is it's just a very good company in my opinion. Of course, none of this is financial advice, guys. SCHD, I'm definitely I'm gonna continue investing into SCHD, so that's my goal right there. Continue to grow that position. And VYM, I really want to continue to invest into VYM. All right, everyone. I hope you enjoyed the video. Please don't forget to leave me in the comment section which stocks are now down that we can take a look at and review. I want to do a review on some oil stocks, which is something that I try to work on, but I haven't had time really. So that's why I did this one very quickly, because I saw the news very quickly yesterday and I took a look at Pfizer. So that helped me make this video very quickly. But I want to do a nice video on oil stocks, which is down the oil sector. So I want to take a look at that one. But please let me know any other stocks that you want me to review in this channel. I'm also creating a spreadsheet to have the information all in one screen, so I don't have to be clicking through screens or anything like that. And I can pull the information from some of the websites that I use to do research. Please don't forget to hit the like button and subscribe so you can continue to join this journey of growing the dividend portfolio, which it is now at $9,858 in market value. All right, everyone. I hope you enjoyed the video, and I'll see you on the next one tomorrow. Thank you. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.